A gentleman from California, Vice Chairman of the committee, Mr. Miller, is recognized for 5 minutes.
Thank you, Mr. Chairman. I want to say that FHA has played a very important countercyclical role in the process of providing liquidity. We've been in a very distressed marketplace. Mr. Sanders, I agree with you. I've been a builder for over 40 years that the private sector has actually been scared out of the marketplace by Dodd-Frank. And I probably would disagree with all of you on certain things, but Ms. Gordon, I had some real concerns in your testimony. You conclude in your written testimony today that saying it's important to give sufficient time to see the results of internal reforms recently made by FHA. That's a correct statement?
Yes, I think
Thank
a
you.
lot
I
of changes
appreciate
have
that,
been
but
made, yeah.
I heard the same thing from FHA in 2009, 10, 11, and 12. They said the very same thing when they testified before Congress. The problem I have is when I look at the actuarial projections that you based your testimony on, in 2009, we were told they were 0.42% plus at that point in time. We were told that by 2012, they would be at the net, that the congressional mandated minimums at 2%. Is that not a correct statement?
That is
Thank
correct.
you. And
I
in
think there are a lot of things
2010,
that
well, that's it.
not
2000,
gone
I'm
the
going
way
to
we
ask you some
thought.
questions. In 2010, they were at 0.59. We were told that by 2011 they would be at 1.75. Is that not a correct statement also? And in 2011, they were at 0.12, not 1.75. We were told that by 2012 they would be at 1.5. Is that not a correct statement? They were actually at 1.28 minus, which means there's a 2.75% difference in what they projected every year based on what they've done and the reforms they've undertaken. Now, I agree that FHA has been a shock absorber for the economy, but it's kind of been broken. I mean, the shock absorber doesn't appear to be really working. I also agree that real estate is probably one of the bright spots in the economy today because I'm doing building in some states and I see the market coming back. But that doesn't change the fact that FHA is undercapitalized. Every projection they've made by the actuarial and the data that they have, that they've given them, has been wrong. And the problem I have is, yes, I agree that much of the losses, the major losses, occurred 2007 and 2008, probably in 2009. Those in that era, I think they might have gone back to 2006 when they started. But they've not done what's necessary to keep themselves in the plus column, and that's taking and analyzing the really risk that they're taking on certain loans and making loans that would offset the losses that they know they were going to take. And if we would have had any bank in the economy or mortgage industry group out there, we would have closed them down and taken them over in year one. But by the projections I see by the actuary, we're talking about 8 years. We're going to forego what we required every private sector lender out there to undergo by the federal government, being closed down 1 year. We're saying, well, that's okay, but we're going to let you go 8. And so the problem I have, even though I support what they've tried to do to stabilize the economy, in your testimony you say that we should not be worried because a projection by the FHA actuary is that the capital reserve ratio will be positive by 2014 and will reach a statutory minimum of 2% by 2017. Now, I'm not trying to impugn you, but I'm impugning somebody, because what they're telling us is to sit back and hope. Hope it's going to happen. Hope they're going to be right this time, even though they haven't been right and in the previous 4 years. And Vince Lombardi was really great. He said, hope is not a strategy. And, you know, I'm unwilling as a congressman, as much as I support the housing industry, as much as I love the industry, I've been involved over 40 years, I see it recovering, but I can't sit back here with taxpayers' dollars and say, well, I hope they're right this time. I mean, from 2011 to 2012, we were told in 2009 they had modified the structure of the FHA so you would not face these downturns, and we went from 0.12 in the plus to minus 1.28 in the negative in 1 year. Now, the problem is, I don't know what's happened since 2012 to 2013. Did we go down another 1.28%? And my time is out, and I was not attacking you, but I was attacking what you were working under.
May I
get back to
briefly
also-
The
respond?
time of the gentleman has expired.